Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar once again takes a trip to the 71-cent handle. As you can see, there is many spikes here above here as it struggles still to continue to maintain its grip above there. But this morning, the market has somewhat held. And what triggered all this was that yesterday, Australian retail sales enjoyed their best given sales in February since late 2017, after the number crushed the 0.3% forecast, with the Australian Bureau of Statistics, the ABS data released on Wednesday, showed a soaring 0.8% in February, picking up from an unexpected weak 1% growth in January. However, fresh momentum has once again waned, and the market is expected to break back beneath the 71 handle, with the supply zone still seen around 71.50-65. The talks between China and the US are continuing since Wednesday, and there is hopes that the tension between the two sides will eventually ease and we will get a possible deal. But no news has come out of such as yet. So the market is still eager to see what the outcome is from those meetings. Well, it would seem that the euro has staged a significant rebound of 111.6080. Now, we did get to a low of 111.82, but from the long-legged doji is that the market has staged further recovery and can still get towards the region of 112.50 to 112.95.10. The dollar index weakened slightly overnight and it dropped from the recent high of 97.08 to a low of 96.50. What triggered this was US growth in services fell more than expected in March and advanced at its slowest pace in more than 12 months. The ISM reported that it missed its 58.1 forecast and dipped to 56.1 last month, its softest read since August 2017, with the previous month being higher at 59.7. Private payrolls also missed its forecast of 184,000 and came in instead at 129,000 in March, according to the latest release from the ADP. The previous month was higher at 197. Later today, we have the ECB to publish the minutes of its latest meeting. No surprises are expected. Then tomorrow, we do have the non-farm payroll report for March, with the forecast of the non-farm employment change expected at 175,000, with the previous month being as low as 20,000. The average hourly earnings is seen at 0.2 with the previous at 0.4. And unemployment rate is expected to hold at 3.8%, that is. So with the technicals still holding for the euro, I do expect to see the market eventually claim its target around 113. Dollar yen isn't going anywhere too soon, and as you can see, still maintains and holds beneath the level of 111.60-65. I do expect to see sellers coming into play here. And from you can see from a technical point, we are breaking down. So we could see a pullback to 110.75 or back towards the region of 110.30 with the base seen at 109.55. Pound has regained further traction to the bull case. And as you can see, the market is now moving further towards 132.20 to 133.50.70 and still locked within the parameters of 129.5 to 133.5. Sterling did gain momentum after Theresa May was forced to work with Jeremy Corbyn after a tied vote. Let's see if the market can hold to these technicals and see a further push, but my present view still maintains to a neutral stance. When you look at the broader picture on gold, we've got a very concerning pattern coming here from an outside range week, and also the fact is the market is not bouncing. And since the rejection of 1,300 is showing concerns of a possible test towards 1,280 to 82. But there is a little bit of faith in the RSI, and if this can break through the midway point, then this could see a further rise towards the region of 1,294 to 1,300. As I mentioned, I am bullish while 1,280 to 82 is intact. To wrap up with oil, well, the market, as you can see, is still a little bit concerning until the fact that we are struggling at 63 to 64, which was given from the measured move from the neckline. I believe now the market should probably now start taking profit at these levels and reassess, because we are overbought. The trend is getting a little bit overheated, and the fact is the momentum is still quite flat. We could still see a pullback somewhere towards the region of $61.5 to $60 a barrel. So do be on your guard there. The base, though, is around 57. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.